All right, check it out. The Dow Jones Industrial Average came within less than a single point of Dow 20,000 before wavering and then finally kind of stumbling into the close, up to 19,963. Now, there's some interesting micro trends, though, that might have to be considered against making history, including the fact that investors, they continue to pile into the same names while eschewing others. In fact, today there were actually more losers on the New York Stock Exchange and NASDAQ, and 55% of the volume on the NYSE was to the downside. Money rotated out of some of the Trump names, though, like the building names. Vulcan Materials, for instance, took a big hit. And technology is the star so far this year. Big winners, including Amazon. Now, the market also probably feeding this morning more off of the wages part of that employment report than the overall lackluster report. Wages up 2.5% in November, up 2.9% last month. That was the best number since June of 2009. And that, by the way, seems poised to be a recurring theme for this year. Now, the question is, will the stock market rally be the bigger recurring financial story of 2017? Joining me now to discuss, Ross Gerber and Shah Gilani. Shah, you and I spent a little time talking about this earlier in the week. Close but no cigar, but I am worried about the internals, about how many stocks are not participating right now.
I think we've seen this before. We saw it in the fall, Charles. I think this is not unusual. The market's a little tired. All the big names that had the huge run-up since the election are just a little tired in here, but we're seeing a nice rotation. Don't forget the technology stocks took a bit of a hit after the election. Now they're taking the lead in the forefront, and they pushed the market up today. So we're about 1/10 of 1 percentage point away from Dow 20,000, and I think we get over that easily next week, and I think then we're looking for 21,000. I think that's actually going to come very quickly. The fundamentals are pretty good. I mean, we're going to have some rotation here and there. We do have, as you say, some issues with some of the issues that are on the weaker side, but I think if we get a firm rotation, those all get lifted up also because they're now considered undervalued.
So, Ross, all the big economic data out, including the jobs report, what could be a catalyst next week, other than perhaps just the notion that the train is leaving the station?
Well, that is actually a good catalyst. You know, we're getting on the phone with our clients and we're telling, hey, look, if you've got cash sitting at 0%, it's time to get into the market if you haven't already gotten in. And so there is a lot of people now rushing to get into the rally. And the second issue is earnings. We've got prices going up, but we need earnings to go up too. And earnings reports are going to start very soon, and that's going to really drive the market through January and February. And we expect actually a really good earnings season. So we see the market moving higher as well. Although
this week's earnings story, Ross, were the retailers, the brick and mortar retailers, and for the most part, a very ugly picture. Right? So, I mean, can earnings really start to shine this soon and justify the rally, particularly when these companies are loath to give good guidance, even if they think it's going to be good?
Well, they all give bad guidance just so that they can beat guidance, because that's what everybody seems to work off of. You know, we adjust for that in the thinking, and we don't look at the short-term moves. But retailers obviously is not a good business because of secular trends towards Amazon, which is a great business. So I think it's just about, you know, you need to be investing into what is going to be great over the next year, and those investments are going to do very, very well. But it's never a case where every investment does well.
Shah, one of the things we're hearing now on Wall Street amongst the so-called pros, I say that because they just lose credibility every single day. Those that miss the rally are saying, don't worry about it, the Trump rally, you sell it on Inauguration Day. Okay, like, I mean, do you sense something like that happening? Like, you know, buy the excitement, sell the news?
No, I don't, Charles. I mean, you could trade it that way, and good luck with that. I mean, you might get a small dip on the inauguration if there's any protest and something disruptive could happen. Yeah, the market might sell off a little bit there. The fundamentals of the market are strong. Earnings are going to be a problem in the first quarter. I think we hopefully will see better earnings. Analyst expectations are for an increase in the S&P earnings of about 6.1% in the first quarter. If we fall shy of that, there could be some problems and a little bit of blowback on the market. But let's look back at the last couple of years. The market has done nothing but go higher. Every little bit, every hiccup, it's managed to cross every hurdle. Every hiccup has been nothing but just a small 10% loss, and everything then when people panicked should have gotten back in, should have stayed in, should have gone more, gotten longer. And then this is probably the trend now. The fundamentals are here. There's no reason for the market to back up now. Having come so far with not a lot to go on, there's no reason for it to back down now, because now we're going to see more cash come into the market if there are tax cuts. We're going to see more cash come into the market if there's repatriation. That's all going to go into buybacks. We have a firm bid under this market.
Ross, real quick, you talked about investors coming into the market. Are you somewhat concerned about the old school, the old school axiom about the little guy getting in at the top?
You know, it seems to be like all the big smart guys are the ones losing money nowadays, and the little guys who invest with guys like me are doing really well. So, you know, the truth of the matter, the hedge funds, the short sellers, you know, I'm on Twitter battling these short guys, and they're just been wrong as heck.
Yeah.
And the election has just killed them. And, you know, I'm laughing all the way to the bank, you know. And so the bottom line is actually small investors have been very prudent and great investors, and certainly if you have guidance from a firm like mine, you're going to do great.
All right, you gave yourself 2 pats on the back. I'll give you a third because you have
It was a good
right.
week. It was a good
All right.
week, Charles.
It was good for all of us. Thanks a lot, guys. Appreciate it. Happy New Year.